Well, it's that time of year. Yes, getting ready for income tax. It's here already again. Seems like we just got finished paying those in April, and here we are at the end of the year thinking about income tax again. It's the time to start gathering information and thinking about what you can count off as deductions. I'm all about saving money, and if it means paying less taxes and it is something I can count off, the government gives me those deductions, I want to make sure I do it, and I hope you do too as well, so you can save a little bit of money. The first thing you need to be looking out for, if you have an escrow account from your mortgage company, it's a Form 1098, and you'll be getting that from your mortgage company. It's going to talk about the taxes and the interest you have paid that year on your primary residence. So you need to gather that up for your tax professional and let them see the interest and taxes you paid on your primary residence. You'll use that on your Schedule A. So you do want to gather that together, be looking for that. Sometimes you pay online and you might just go online and get that from your bank. Usually that's in January where you'll be able to get that. The other thing you can start looking for is maybe if you paid your taxes yourself. And you can look for the bill, hopefully you paid that. The year that you pay it, you get to count it off, your income tax. So if you don't escrow, you'll be paying the taxes yourself. Save that receipt where you paid it. And then if you still have a mortgage, you'll be getting interest only on your 1098 from your mortgage company. So those are things that you can count off on your primary residence. Could be you purchased a house this year and you got this lovely package, all the papers that you signed at the title company. Pull that out. Your tax professional would want to see your closing sheet. Your closing sheet is going to have all the information about your purchase. Also talks about on here the taxes that you paid, possibly points that you paid. So you do want to take advantage of some of the expenses on this closing sheet. A lot of people ask, well, can I count the homeowner association dues? Can I count the legal fees and a lot of these other expenses, property insurance, things like this? If this is your primary residence, these are not on itemized deductions for your income tax. It gives me to talk about if it's an investment that you bought. Say you bought an investment property this year. There are expenses that you can count off for an investment property, so be sure to get the closing statement to your tax professional when you purchase your investment property. Also be looking out for your taxes, insurance, and interest on that investment property so you can count those things off as well. Another thing you can think about is if you sold a house this year. There is some exemptions from paying taxes if it's $250,000 or less for an individual or up to $500,000 for a couple. That is tax exempt. There's all kinds of stipulations with that, so be sure and talk to your tax professional if you purchased, if you sold, or if you own a property, and make sure you can take advantage of all the things that you can. Some people say, I want to have a business in my home. Does that help me on income tax? Good question to talk to your CPA about. Gather the information of the purchase and what you paid for your house. Gather up all the paperwork. Take that to your tax professional. Talk to them about if that is beneficial for you. Thanks for joining us. Have a wonderful year and hope you can find some deductions for your taxes.